All right, good morning, everyone. This is the first edition of Technical Tuesdays. So your main host for today will be me, Mohamed Traore. D will also be joining Technical Tuesdays here and there to give some of his 2 cents and just to make sure that you're getting multiple perspectives on all things technical analysis. First, before we begin, I just want to let you know that technical analysis is not something that's just quick to get. There's a lot of factors you got to play in. So at the end of the day, there's going to just be a few things we need to go over before we really do a deep dive into technical indicators, such as how to read a stock chart. That's very, very important. You can't do technical analysis if you can't even read a chart. So yeah, today we're just going to start with some basics. But before we get into that, I just want to make sure I take the time to show you some of the most important tools that I like to use when I'm doing technical analysis. All right, so here we go on that end. All right, so I got some things on the screen here, just stock market overview. So this is from Chartmill. Chartmill is a great website. You can sign in using Facebook, or you can just use any of your own things as well to just get in and make a login. So here's just an example chart here that you have, and you can just kind of download it to your computer like this. So you don't have to do it by website. You can just click the top bar on your computer to just get to it. You got market statistics and volume. So these amount of stocks that are above the simple moving average of 200, amount of stocks that are declining, and yeah, so all these different indicators that people like to use. So number of stocks that are advancing, and then you can use a screener based off technical indicators too to help you find new stocks as well. If you want to be more of a technical trader than just fundamental, or if you want to use that to help you find stocks that you can apply your fundamental analysis to as well. So here's all the sector performance today. So this was from May 17th at close, all the sectors that advanced and declined. You saw the biggest advances in mining, retail trade stocks, wholesale trade stocks, manufacturing, financials, transportation. Those are the biggest ones. So the most popular tickers as well on Chartmills, this is another thing you can use to just give you some ideas of stocks to look into. You got news you can look into. And then you have a lot of articles people write on technical indicators as well to really just teach you about how each of these work. So it's just a phenomenal resource. Bull flags as well, momentum squeeze plays, technical breakout setups, just all these different things you can use to really learn so much about technical analysis. So the Blacksmiths podcast, Technical Tuesdays were one tool, but just know there's so many other tools available to you. Then there's Thinkorswim as well. I don't have 200K cash in the account. I just want to let you know this is just the actual Thinkorswim paper money account. All right. So I log in with this every now and then to just test ideas, test frameworks, test technical analysis, the kind of things I'm looking into. So a cool thing about this is I can still take any stock I want, type it in. Like, let's say I'm looking at Nokia or something. I can take this stock. I can buy or sell off on this screen right here. I can look at the option chain, and I can look at the volume price analysis, level 2 data as well, which is another piece that's going to be important anytime you're doing technical analysis, is trying to trade on technical breakouts. You want to see the bid and ask spreads, right? So again, like I said, there's just so much you need to factor in and look into. All right. So at the end of the day, we're just going to do some of the basics today just to make sure that you really are armed with the correct tools before you just hop in and start throwing money in. And again, that paper trading, very, very great tool to use just to make sure that you're not just throwing money in anything. I know I keep repeating this, but once again, it's most important if you're going to invest in anything that you not only do your research, but you really know what you're doing. We're one tool, so many other tools available to you. All right, so one stock we're going to look at today is Kinder Morgan. So Kinder Morgan, this was the stock that I briefly mentioned in that first episode of Stocks is Serial. This was a stock I found by just doing some due diligence and some deep research on other pipelines that were affected in the same areas that the Colonial Pipeline was pumping oil to. So the Kinder Morgan services a lot of the same areas the Colonial Pipeline did. So after doing that digging and seeing that, I realized, oh, they're going to see some big windfalls from having that extra need to be one of the companies still able to pump gas while Colonial Pipeline is out. I also realized after looking at American Petroleum Institute numbers on our number of crude oil imports versus exports, also how much the stockpile had been changing lately, the increasing demand, how demand increases into the summer and things of that nature. All right, so even if this pipeline gets back up, still going to have a few issues with supply. So Kinder Morgan is going to be a company that's going to have some big windfalls from that. Just from what I've read, oil and gas companies, whenever you're above $50 a barrel for gasoline, oh, those are some big windfalls those companies are going to have because they're making big profits and any rates above that. Right now, last check, crude oil futures, and futures are something we're going to have to go over later as well, but crude oil futures are above $66 a gallon right now. So we all know that, Kinder Morgan's going to just have some massive windfalls for their Q2 earnings. All right, so before we just continue on that end, let me just share screen with you so you can see that end. So, I got a lot of different technical indicators on here. This is what I mean by we got to start slow. Can't just jump in. I got RSI on here, MACD, moving average convergence, divergence, stochastics. I like to look at things like Bollinger Bands to map how the stock is moving within certain ranges, average volume weighted price average, which is VWAP, fractal chaos bands. I got other indicators on here, such as all these different moving averages, but I'm going to take off some of these for us today just to make sure we're not focusing on too much and that we can just focus on some of the more basic things today. All right, so we really want to look at our stock charts here. So this is Yahoo Finance, something else you can use as well. So in terms of everything on this chart, and the things at the bottom, these little lines, these are volume, right? So you have stocks that sometimes trade over average volume. So if a stock is amount of average volume for the last 3 months, to me, that could be a bullish indicator or a bearish indicator. One thing to just watch is what happens on the candlestick on that day. The color of the volume bar will be the color of what the candlestick ends up as. So let's zoom in and look at how to read a candlestick, all right? So if you notice here, you got the red ones and you got the green ones. So to read a red candlestick, basically what you're looking at is the bottom right here, that's going to be the closing price at that time range. Right now I'm on the interval of 1 day. So at the start of the day, if it's a red candlestick, that's going to mean that, oh, all right, I opened up here, I closed down here. And those little black tick marks are just other values that the stock was moving at during that day. If I have a green candlestick, that's meaning, okay, I opened down here and I closed up here. So that's like filling up your bar or depleting your bar. And if that's still confusing, you can do hollow candles as well, where the candles that are like filled, quote unquote, those are going to be the red ones. The candles that are empty are going to be the green ones. Just think of it as filling a bucket of water. If you're having the red candlestick, so that's weighing you down. And let's say that you pumped all the water out or squeezed all your toothpaste out. It's gonna look empty. All right. So think of that as your hollow indicator for the green one. So that's just kind of how you're looking at these candlestick charts, right? And there's so many other ways to do it. You can look at it as just a line graph, but the thing is that doesn't give you as much about daily price movements and ranges. You can do it as an area chart as well, but again, it's not the same as candlesticks. You also have the bars in these tick marks. So when I look on here, and if it's still confusing to you, just remember these volume lines will let you know. So when I use these bars, I can tell on here that this is where it opened at, this left side, and this is where it closed at, this right side. So from higher to lower. So that's the same thing as a red candlestick. On this side, I can see the same thing with the green bar. it's opened down here, it closed up here. So opened low, closed high. And this is a daily chart. You can look at your chart on so many different ranges a year, which is not very typical for interval. The typical intervals are 1 day. And then if you're looking for more swings and trades, or it's a more volatile period, or you're just trying to do more granular analysis, you can look at the 4 hour, the 1 hour, 30, 15, 5, 2, 1. My favorites to do are begin with the 1 day interval chart. And then I like to go at the 4 hours, then the 1 hour, then the 15-minute, and then I like to close out on the 1 minute, because I want to see the different time ranges that things are moving. All right, because the important part about looking at the different time ranges is you get such a better analysis of how this stock has been moving, and also how it relates to all the different indicators as well. So remember when that Colonial Pipeline thing happened? So that was Friday, May 7th, that all that started. The news didn't come out till the weekend, right? So you see how the next day on this chart comes up as May 10th, because, you know, stocks aren't trading on weekends. But look, so how it opened at 1749, closed at 1784. The next, on Monday, when we start trading again, it opens at 1802, the high 1842, how it jumps like that. It's that news, and some other people probably realizing what I realized as well. And then you look at this week, and we see that we still have all these gas stations that aren't full on gas, but we're also gaining in the price of crude oil, so their product is worth more. And we also are getting closer to Memorial Day and the bullish season for oil. So Kinder Morgan's just going to see all these boons in their next earnings. People are realizing this and slowly coming in, but you're probably not hearing about this stock so much, just getting thrown around on things like CNBC and everything, because, you know, whales on Wall Street are trying to make their money, and they're not going to be talking about it constantly either. But I'm not going to just look at what the guys on Wall Street are openly talking about in trading. I'm looking at how we're seeing on volume, how the candlesticks, how the fundamentals are, but also the technical analysis and just the macroeconomic landscape. So all these different factors in there. And I know it sounds like a lot, but we will get there in time. Just want to make sure we take it a little slower. So we take all the tools we're giving you and give you a lot of time to really settle in and figure it out. And you can tell here how yesterday closed at 1880. Today, we're already at 1895 pre-market. So the official market opening hours, 8:30 a.m. Central Standard Time, 9:30 a.m. Is the Eastern time. But as well, you can start trading just regular stocks at about 8 a.m., 9 a.m. So pre-market's about until then. But the official bell, 8:30. Is when you can just start doing options and things like that and do all that general trading. If you do have the type of account or a bigger service that you use, you can trade overnight, like with the TD Ameritrade, Fidelity, things like that. You can also trade later into the day, post-market, but you don't really want to do too much of that unless you really know what you're doing and you really know what you're buying with the stocks, because the moves after hours can be so much more unpredictable. But again, this is just for informational purposes and making sure you have all the information and knowledge possible. So just know we'll be back very soon with Technical Tuesdays every single Tuesday. Just a quick primer for you to make sure you figure a little bit more of this out over time. And next time we're going to focus more on moving averages. So simple moving averages, exponential moving averages, how you can use those to figure out whether a stock is in a bearish or bullish trend. And we also will look at RSI, Relative Strength Index, which is an indicator I love to use, and that is very, very popular. So thank you so much for tuning in to this first episode of Technical Tuesdays. We'll be back very, very soon. And just know it's got stocks and cereal over the weekend again. Gonna have some more write-ups for you guys and newsletters. And thank you so much for enjoying the show. We're gonna play out with the disclaimer.